Recently, I was asked a great question by one of my subscribers as to how can we find a 10 bagger like Elf, before the move happens. And I'm just gonna, go through a couple of things that I look for, and then, the stock hopefully will take care of itself. But we all want to make money in stocks, and we're all looking for a 10 bagger like Elf. And I'm just going to give you, five stocks that I believe have a potential or a chance to do something like a Elf did. Anyway, you're looking at Elf, a weekly chart, and in 2022 during the bear market, all it really did was go sideways. So a lot of stocks, and you know which ones, just sold off, like some of the software names sold off more than 90%. Stocks like Shopify and, great stocks like CrowdStrike and Zscaler. So this one didn't. During the bear market, it just traded sideways. But that's only one component of what I saw in Elf at the time. I was looking at a company with fantastic sales and earnings growth. The stock has to have sales growth specifically, and if it has earnings on top, that's great. But if it doesn't have earnings, the earnings should come with strong sales growth. And another area that I look for here is the cash flow and return on equity. So Elf had great sales, great earnings, cash flow, and return on equity, strong balance sheet, but the stock wasn't going anywhere. Of course, we're in a bear market, right? So it was showing relative strength by just going sideways. And then if I zoom in here, I can show the actual price here. It was down, was it $20 in May of 2022, and then it formed this base here. And this is why I am attracted to bases, because when a stock breaks out of a base, all stocks, all great stocks, so all model book stocks of all time broke out of a base at one point. Cisco Systems, Nvidia, all of them broke out of a base. And this one broke out of a base here on the week of August 5th. It was up 12%. Yeah, it pulled back to a moving average, but you can see it went from, $20 to 200 whatever it was recently, 221. Okay, so Elf was a 10 bagger, but the things that I look for was the sales growth, the earnings growth, cash flow, and return on equity. And I kind of knew Elf was going to be a big winner, and I was long Elf, way back in the day. I still own Elf. I've sold it, as it forms these bases. I don't like to sit through bases, so I sell, then I buy back. But people say I'm a retard. I should just hold on forever, but I don't do that. That's the way I play the game. Anyway, that was Elf. SMCI is another one that we had, and my friends who we text back and forth were saying at $50, this stock was a $100 stock masquerading at 50 back in 22 during the bear market. Once again, this thing just went sideways while everything else was getting totally pounded. And then when we had when was it, October? In October, when we had the lows, October 13th, I believe, was the low, and it held a low there of $50. And then it broke out of a base here and ran 12%, formed another base, and still it was an opportunity below $100 here. But then it ramped from 100 to 300, and then formed a base there at 357, and went from 357 to what is 1229. So that's way more than a 10 bagger. But once again, we knew that SMCI had tremendous sales and earnings growth, and still does. Triple digit last quarter. And it had, tremendous cash flow, return on equity. 40% is phenomenal. If you get, stock anywhere above 15% is great for a company, but, big cash flow, big return on equity, just going sideways during the bear market, and then was a big, big winner. I still think it's a stock to keep an eye on. Same with Elf on pullbacks. Another one was VRT Vertiv. This one did sell off, during the bear market, kind of went sideways. And then this broke out of a cup with handle pattern, of course, and went 27%. It traded from what was it, $11 up to 100 something recently. So yeah, 109 or something. It's been roughly a 10 bagger in a short period of time. But these moves take time. You're looking at 12 to 18 to 24 months. So it's not going to happen for you in a week or a month or even a quarter. these moves of 10 baggers, it take time. So now the question was, what stocks do I think could possibly be a 10 bagger? And some of these might surprise you. And I'm not saying these are going to be 10 baggers. They might not even be 2 baggers, but I think these have a chance. And these aren't the only ones. I'm sure there are many, many more. Well, not many more because those are pretty rare, but one is Bros. And what attracts me to Bros is I know they're taking market share from Starbucks. How much? Well, time will tell. But it is breaking out of a stage one base here. And you can see the earnings line heading due north. Okay. So earnings, like I said, earnings and sales growth, and Bros has it. Right now, it's got a market cap of nearly 7 billion. Can it be a 30 billion company? Yeah, over time, I believe it can. It's got cash flow. It's got more than 15% return on equity already. Okay. And it's just growing. They've grown from, Oregon, the West Coast to the South. And I believe when they get to New York, if you can make it there, you can make it anywhere. And they're not in New York yet. So if they can make it to the East Coast and up the Eastern Seaboard, I think Bros could be a big winner here. And it's given you already, there's 20-30% sales growth. So we'll just have to wait and see each quarter, how they do. So just monitor this one. But I think Bros could be a big winner, and I think it's just getting started. Yeah, and if you even got back to its, came to IPO right before the bear market, $80, we'll take that, won't we? Yeah, I'll take a two bagger all day long. But Bros is my first one that I think has a chance to be a two bagger. I'm not going to say 10 bagger because those are pretty rare, but another one is TMDX. Now they have the sales growth. They have new products and they have sales growth, but they're not, they don't have the cash flow or any return on equity. They're still losing money. So this to me is more of a crapshoot, but it's only a 4.4 billion market cap. So could it be a 40 billion market cap? Yeah, I guess over time, sure it could. It's going to be over time though, and it's going to take a long time. But one thing I do like is the earnings line going north. Now they had a couple of quarters where they spent a lot of money, just changing things around in their business model, and now their earnings are taking off. So I think Team DX, if not, a 10 bagger, could at least be a two bagger and trade at a 10 billion valuation. As the interest rates come down, which they're going to eventually, the multiples expand. So some of these stocks that you think are expensive are going to become way more expensive. And TMDX eventually, I believe, will have cash flow, will have, return on equity, will be a profitable company. It's just, next year, what 2025 it's estimated to earn $1.36 and 89 cents this year. So, the earnings are coming. It's just going to take time. So, write this one down, put it on your list. And I believe, if it doesn't have a 10 bagger, it should be at least, a two bagger from here. We'll always take a two bagger all day long. Another one is a solar play in the energy space, is well, first of all, let's take a look at the earnings line. It's heading due north, right? And it IPO'd last year, February of 2023, had this consolidation, and now it's breaking out into its institutional advance phase here. I believe it's just completing its due diligence. They do have cash flow and return on equity should be coming, but they have the sales growth, looking at 42% last quarter, 23, 38, 42. So they're accelerating sales growth. It's got a 8 billion market cap. Could I see it at 20 billion? Sure. Why not? Over time, they're already doing what, 3 billion in sales. So it's only trading at, 2.5 times sales right now. So it's not really an expensive stock. But, for me, I would like to see some return on equity. I'm a fundamental guy first, and then charts and technicals later for buying a stock and getting into what I believe could be a big run of a two bagger or more. All right, my next one has to be, I've got to go back to the I've got to go back to the restaurant group, and restaurant is seeing a real sea change now. I mentioned Bros is taking market share, and I believe that the eating habits, the dining habits are changing, and and I just think Kava is one that's going to be their model is going to be a big winner. And you can see it's had its due diligence phase and now in the advanced stage. And I don't know, how long this can advance, but it's got a nearly a 10 billion market cap. What can we expect? Maybe a 20 billion. I could see that for Kava, a two bagger. You can see it's got significant sales growth. Once again, yeah, it has earnings so far. It's got a little bit of cash flow, 22% return on equity. So this is a solid business already. They're not only a restaurant, they sell their products in Whole Foods and I think Trader Joe's and so yeah, I think it only operates in 24 states. So it's only halfway in the US, so it has room to expand, much like Dutch Bros. So that's my second restaurant stock, and I'm gonna stay away from them for now. All right, so I did Dutch Bros, I did the Solar Stock, I did the TMDX, and I did Kava. My last one is a biotech stock. I know people do not like biotech stocks. This one is not quite as speculative as you might think. It does have a heavy short interest. Earnings line heading due north. They do have cash flow. They do have return on equity. They do have the best drug in the multiple sclerosis space. They have a contract with the VA. They're giving you tremendous sales growth. This guy's just getting started, and they have earnings. They're going to be profitable and much more profitable, I believe, in 2025 than 2024. They have not included their VA revenues in their calculus here. And once the CEO does that, combined with taking market share, I think this stock, at what 2.4 billion could be a $10 billion company. So you're looking at, a four bagger from here. I think I know people don't like to get into biotech stocks, but this is less speculative than others. I mean, it's not Eli Lilly or Novo Nordisk, but this is a best in show multiple sclerosis drug, and that's my fifth stock, TGTX. A couple others that I don't know enough about that I like the way they move. I mean, we're not in a bear market anymore. We're in a bull market, right? So I'm looking for stocks that are showing signs. These are peacocks that are, flashing here, these big gaps higher, in April, and a big, gap higher in May 7th. This is ZETA. Zeta Global, and this is, I don't know enough about it. Like I said, 3.7 billion. Could it be a 20 billion market cap stock? Sure. I don't know why not. It's growing sales at 25%, but it doesn't have the cash flow, it doesn't have the return on equity. So I left this one off. But these are the types of stocks that, you can see it's been in this IPO base and now it's starting to move higher. So perhaps this could be one, but it just doesn't have the fundamentals that meets my criteria. But I do acknowledge that it has potential. Sweet Green as well doesn't have the cash flow, doesn't have the return on equity, but it does have sales, and this is part of the new paradigm in U.S. dining anyway. And they came public right at the wrong time. November of 2021, we know what happened with the Fed-induced bear market with the raising of interest rates. These stocks got hammered, but it's coming out of a stage one base. And you could say it's emerging from this due diligence phase, and now it's reaching its institutional advance phase. It was up 5% last week, but had this big move. And this is what I look for in a bull market, these gaps. Stocks that have the ability to gap. It's showing you something. It's surprising the analysts. It's surprising Wall Street with its numbers. So yeah, 34% moves. Yeah, those are very attractive. And like I said, this is a 3 billion market cap stock. Could it be a 30 billion and a 10 bagger? Sure, why not? It's going to take time. Like I said, it's not going to happen over weeks or months or quarters. These are 18 to 24 month moves that are possibilities. Anyway, I just gave you an answer to a question that is very difficult to answer. We would all like to have a crystal ball and know, buy SMCI at 50 and have it run to 1200, and life, we could live life happily ever after, and buy Elf at 20 and watch it run to 200. Those are great stocks. Those are monster stocks. They're pretty rare, but they're out there. And I just gave you five that I like and two other alternates that are possibilities. Anyway, I hope I answered your question. What to look for, cash flow, return on equity, and in a bear market, the sideways action, but now we're in a bull market. You look for those stocks that are making those big leaps, these big jumps. And that's telling you something here that, Wall Street is underappreciating these stocks and these big moves in these names. So that's what I look for, folks. And that's my story, and I'm sticking to it. And yeah, I'm long bros, and I think it's going to go higher. Taking market share from Starbucks. Anyway, at mcstockcharts.com, we never give up.